Oh, well, simply just by using trend following on as many markets as possible. One great thing about trend following, when you list the markets that can be in a portfolio, it's a short list because the assumption always is, well, it's buy and hold. And so we could include gold because over time it has gone up. I think at one point, Bitcoin was includable because it had gone up. Well, trend following, you can put almost all the assets in a portfolio, liquid diversifying assets. And if you wrap trend following around it, miraculously, they all become profitable. There's no more 4% of the stocks making all the money. Now there's 5 to 10% of the trades on all of the markets that on an annual basis that make all the money because trend following is making most of the money on the outlier trades. But it converts all of these seemingly unacceptable markets that buy and hold have never had any reason to be in a portfolio. It adds to the diversification by including those in a portfolio, and they're all profit contributors over time from a trend following philosophical point of view. Even if historically they haven't made profits like cocoa, I think it's a negative over the past 50 years. That doesn't necessarily mean that the future won't be somewhat different. The trend followers, even though they're somewhat always talking about their back test and very reliant upon back test and research and computers, I think the best idea for them is to not take that history too seriously. So what has worked in the past may not work in the future. We may see things we've never seen before. We saw a big fail in 60-40. We may never see another one. I don't think our product or our trend following strategy gives a crap about that. I mean, is 60-40 dead or not? I could care less. the trading 300 to 400 markets, lots of currencies, commodities, stocks, and bonds, long and short, with trailing stops and stop losses and trend following strategy is going to be superior over time in the future. Compliance just cut that out, but in our opinion, when I got started into the business, it wasn't that. And it lasted for a long, long time. The marketing strategy until I would say 2010, we would always, part of our deck would always show CTA trend following made more money than the S&P. And of course, it had a better risk control with all the markets and the shorts. And I think we're going to get back to that eventually. This has been an anomaly with this Fed policies. And I think hopefully we can get back to that to where you do get rewarded for this approach that maximizes the potential for profit, and at the same time, there's no, it doesn't do anything to hinder the risk control as well.